Good morning, everyone, and thank you for choosing Market Briefing analysis of today's financial news. Every day, our goal is to provide you with a thorough and knowledgeable analysis of the most relevant financial news to help you navigate the complex economic landscape. Let's begin our daily review. Financial News, June 11, 2023. In today's ever-evolving global financial landscape, markets across the world are grappling with a series of challenges and uncertainties. From economic slowdowns to geopolitical tensions, investors and analysts are closely monitoring the developments that are shaping the international markets. In this report, we delve into the latest financial news and market trends, shedding light on the key factors impacting the global economy. Starting with the European markets, major stock indices experienced a mixed performance as investors weighed the effects of recent economic indicators. The Eurozone's manufacturing sector showed signs of resilience, with the Purchasing Managers' Index, PMI, climbing to 53.2 in the latest report. However, concerns over supply chain disruptions and rising inflation continue to create uncertainty, impacting investor sentiment. Across the Atlantic, the United States stock market experienced heightened volatility due to a series of events. Firstly, the Federal Reserve's announcement of a potential interest rate hike sent shockwaves through the market, causing a brief downturn. However, the release of positive employment data brought some relief to investors, reflecting a 4.8% decrease in the unemployment rate. Shifting our focus to the Asian markets, China's economy displayed signs of deceleration as industrial output and retail sales figures fell short of expectations. Amid ongoing trade tensions with the United States, analysts are keeping a close eye on the impact of these developments on global supply chains and commodity markets. Meanwhile, in the emerging markets, Latin America witnessed notable financial developments. Brazil's stock market experienced a surge as positive growth forecasts and government reform plans provided a boost to investor confidence. Mexico's economy, on the other hand, faced challenges as inflationary pressures and political uncertainties posed potential risks to its financial stability. Commodity markets have been facing their fair share of disruptions as well. The recent surge in oil prices, driven by geopolitical tensions in key producing regions, has sparked concerns about its impact on global inflation and economic growth. Additionally, the ongoing supply chain bottlenecks and raw material shortages have led to a rise in commodity prices, exerting further pressure on industries worldwide. In the technology sector, international markets are closely observing the performance of major tech giants. Recent regulatory actions, particularly in the European Union and China, have prompted concerns over stricter regulations and their potential impact on the profitability and expansion plans of these companies. Furthermore, the global retail landscape is witnessing a paradigm shift as e-commerce continues to gain traction. Marketplaces like U2 Supermercado and Panorama are offering exclusive discounts and benefits to their Prime members, aiming to capture a larger share of the online grocery market. With the rise of online shopping, traditional brick-and-mortar retailers are adapting to these changing dynamics to remain competitive. It is evident that international markets are navigating through a complex web of challenges and opportunities. Economic indicators, geopolitical events, and technological advancements are all influencing the trajectory of the global economy. In such times, investors and stakeholders must remain vigilant, adapting to evolving market conditions while assessing risks and seeking potential avenues for growth. We witness the United States and China, the world's largest economies, pursuing divergent monetary policy paths. As inflation concerns loom large, market participants are closely monitoring the implications of these decisions on global markets. Let's delve into the latest updates shaping the financial landscape. Starting with China, the country's recently released inflation data paints a worrisome picture of its post-pandemic recovery. Producer prices in June recorded a sharp decline of 5.4% year-on-year, marking the ninth consecutive drop and the steepest decline since December 2015. Furthermore, consumer prices remained unchanged compared to the previous year, missing economists' expectations. These figures indicate the risk of deflation in China's economy and highlight the urgent need for measures to reflate economic growth. To address the economic challenges, Beijing has already implemented rate cuts in June and has now taken further steps. Late Monday, Chinese authorities instructed lenders to extend outstanding loans to alleviate pressure on the property sector. While the Chinese real estate sector breathed a sigh of relief, concerns over the impact on Chinese banks persist. Before we continue with our analysis, we'd like to remind you of your support for our channel Market Briefing analysis of today's financial news. If you're enjoying this video and find our content useful and engaging, please consider giving it a thumbs up and subscribing to our channel. This helps us grow and bring you even more quality content. Now, let's get back to the financial market news and the latest updates. Across the Atlantic, all eyes are on the United States as inflation data is set to be released later this week. The market awaits these figures eagerly, seeking clues about the Federal Reserve's potential interest rate hike. In May, U.S. inflation cooled to 4%, the lowest annual rate in over 2 years. However, core inflation, which excludes volatile food and energy prices, rose by 0.4% month-on-month and 5.3% year-on-year, indicating underlying price pressures. Central banks worldwide find themselves at a critical juncture in their battle against inflation. Société Générale economist Coco Agbo-Bloua suggests that they are at the end of the beginning as core prices persistently remain high due to various factors. Market sentiment indicates a more than 90% chance of the Federal Reserve hiking rates to a range of 5.25% to 5.5% at its upcoming meeting, given the persistent tightness in the labor market and the resilience of the U.S. economy. Adding complexity to the macroeconomic landscape, Nomura predicts that other central banks in Asia may start cutting rates even earlier than the Federal Reserve. As inflation concerns loom and countries grapple with economic recovery, central banks face the delicate task of striking the right balance to support growth while taming rising prices. It is worth noting that inflation around the 2% mark seems to be a common threshold for policymakers. As we navigate these uncertain times, market participants brace themselves for potential market volatility and closely monitor central bank actions and economic indicators. The divergence in monetary policies between the United States and China and mounting inflation concerns have created significant challenges for global markets. China's battle against deflation and the United States' anticipation of higher interest rates have intensified market volatility and investor uncertainty. As central banks navigate these uncharted waters, it remains crucial for market participants to stay vigilant and adapt their strategies to the evolving economic landscape. Key events this week. Some of the main moves in markets. Stocks. S&P 500 futures rose 0.1% as of 6:04 a.m. New York time. Nasdaq 100 futures rose 0.2%. Futures on the Dow Jones Industrial Average were little changed. The Stoxx Europe 600 rose 0.5%. The MSCI World Index rose 0.3%. Currencies. The Bloomberg Dollar Spot Index fell 0.2%. The euro was little changed at $1.1006. The British pound rose 0.4% to $1.2914. The Japanese yen rose 0.6% to 140.43 per dollar. Cryptocurrencies. Bitcoin fell 1.1% to $30,440.65. Ether fell 1.2% to $1,870.65. Bonds. The yield on 10-year treasuries declined 4 basis points to 3.95%. Germany's 10-year yield declined 4 basis points to 2.60%. Britain's 10-year yield declined 3 basis points to 4.61%. Commodities. West Texas Intermediate crude rose 0.4% to $73.29 a barrel. Gold futures rose 0.5% to $1,941 an ounce. In conclusion, we'd like to thank you for watching Market Briefing analysis of today's financial news. If you enjoyed our insights and found the information helpful, please consider leaving a like and subscribing to our channel to stay updated with future analyses. Thank you again for your support, and we'll see you soon with more news. Remember, the information in this video is purely informational and does not constitute investment advice. Always consult with a professional before making financial decisions.